Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Let's get into some of those numbers.
Sure.
We'll start domestically. The Westpac consumer confidence number came out negative 1.3. They were expecting positive 0.5%.
Yeah.
And the chart tells a story. There's a lot of down months over that's a 2-year chart.
Yep.
It goes into the narrative in the domestic economy of tough times.
Yeah, it does. And as you said, it was what the analysts wanted and what we all thought was going to be a plus, and it turned into a minus. And when you look at the difference, it's nearly down, differential is about nearly 2%. So it's a bit of a wake-up call, and it'll be interesting to see, as we have always said, how this first quarter is going to materialise. And when we look at it, mid-April, how the fabric of quarter one and pretty much quarter one, of course, in China.
Yeah, we'll touch on China shortly. The Aussie dollar, it's come off quite a bit. When it was travelling around that 68 mark only about a month ago, considering what was happening in the US, it looked as though that Aussie could get up to 70 plus.
Yep.
Clearly hasn't happened.
No.
And a lot of that is related to China as well.
Yep, exactly. I'll tell you what, this first 3 weeks of the calendar year have been extraordinary for currency trading. Yen, 5% move, and the Aussie has just been, that downdraft has been wonderful. So everyone's been short, it's just been a trader's delight. If you only traded 2 markets, and I know our traders trade many, but if you were short Aussie, short Yen, rub your hands with glee.
Yeah, they certainly would have been. And once again, in the Aussie market, on the equity side of things, has been flat, or has been down since the start of the year. When yes, it's only a few weeks, but clearly not like that in the US and Japan, which we'll touch on shortly.
Sure.
But, China, GDP numbers came out, it was sort of around that 5% mark, which was pretty much on par with where it's at, but there's still some major issues in China around the equity markets and the property market.
You bet. CSI 300, 4,300 approximately this time last year, or close to it, now under 3,200 or at 3,200. So it's been a washout, and we've just got to see how it rolls again. We've got the Lunar New Year shortly. The markets will be shut for the best part of a week and a half. But let's just see how the appetite is for investment into China. I know you've got a great chart coming up. It's just a showtime. I looked at some numbers yesterday because on my breakfast show, and I made reference to Bloomberg, one of the indexes out of Hong Kong, and it dealt with China. It was down 54% for the year. Andrew, this is just washed out. That is a depression.
Yeah, and that equity market in China has been horrible for a few years now.
Yes,
considering
5-year low, the CSI 300.
Considering what's going on in the other markets around the world.
Oh, look at the yen.
China, foreign direct investment, has just fallen off a cliff. So you look at 2021, 344 billion, down to 180 billion, down to 15 billion.
Yep.
It's just extraordinary.
No one's putting money into it, and that's the reason, and that's why they've lost confidence, and that's why the equity market, this is one of the key drivers. If you've got no money coming in, and that's all been propping the economy up, look at it. I don't know how. If this year, and there's 15, as you said, in 23, if this year is worse, then there's, I don't know, where's the catch a falling knife?
You don't want to be doing that. Japan, once again, CPI came in around that 2.6 mark, so it's been very steady, but real wage growth is obviously negative still, considering where the CPI is, and unlikely the BOJ is going to make any move on interest rates anytime soon.
No, well, they're saying that they thought it might be March or April with Governor Ueda, but now they're saying it could be, probably will be in summer in Japan. So let's just see again how that all goes. But the yen at the moment is just crushed, and have a look where we are as far as Nikkei, absolutely on fire, that Japanese stock market. It's just extraordinary. Yeah,
they might need to do something on the rates with the weakening yen there. So
could be intervention.
Yeah, it could be, but we'll wait and see on that one. Over to the US, obviously earnings season, some of the big names come out this week: Visa, Amex, Netflix, Tesla out later in the week, and then obviously as we go in the next couple of weeks we get the big tech stocks. But the forward PE, the market at 19 is sort of close to average. The Magnificent 7 at 27, but do you stand in front of a runaway train at the moment? They're very strong still.
I can't comment, Andrew, because everything was built on, AI, but everything was built on that we're going to see aggressive rate cuts. This is now it's washed out a little bit, and they're saying it's probably now, from a Fed perspective, late spring into summer, and the ECB possibly the same. So there's the issue, and what does that mean as far as naturally we'll probably have a stronger US dollar, and that's why all these currencies are being crushed. But I don't know. I mean, it's hard. Traders have just got to, don't marry a trade. Things can happen quickly, and don't go to sleep if the market's open.
No, and I think it's like, once again, there's two ways of looking at it. You can look at the market as a whole.
Yes.
If you're trading indexes or ETFs or whatever, or are you trading a company? And
That's
you might
right.
be only in 4 companies.
That's right. And you
they
may
could
only be in
be-
there for a session.
Yeah, but those companies could be absolute standouts, and you just sit on it
Yeah.
because the cash that these companies have is extraordinary.
Yes, it is. And what they generate.
Yeah, totally. And finally, just to look at talking equities, this is just the chart of the S&P since 1928. So
Well, you were around that first nuclear weapon used in the Dust Bowl of 37.
the Dust Bowl. It was like a cricket match.
It does. When you look at that, and you look at the crash of 29 and the severity of it, it was dramatic when you see how it washed out in that 4-year window, 29 to 33. That really is crushed.
Yeah, and I think once again, it's obviously a chart over a very long period of time, so you don't get to really see
The magnitude of some of the
and also the range. Like when it did sell off, how long did it take before it reached its all-time high again? In some instances, that's 3-4 years.
Yes. I look at 20, I did study that one. I remember years ago I did an interview with CNBC, and I mentioned that, and 29 was the peak. It took till 1955, I understand, for the S&P to get back to above what it experienced in 29.
Yeah, well, which is pretty much what that chart is saying there.
Yeah.
So I'm sure it sold off significantly. It did. The trend was going up, but you're right. It took
the best part of 25 years.
to get back to its all-time high.
Yeah,
So
and then it was just off to the races.
yeah, very different these days because those ranges are a lot shorter. So.
Yes, exactly.
But it gives a pretty good snapshot.
Well, I love these charts that you put up because this helps our traders, Andrew, and it really educates everyone as far as a window of time. There's a window of 95 years from 1928 to 2023, and all those wonderful events over that window of 95 years, it just demonstrates, as you keep on saying, hold on and just stay in the market. And it's your famous words. It's not the time. It's not the
time in the market, not timing. the market.
Not timing the
But
market.
then again, I must admit, for a lot of your traders, timing the market is critical because it's all very short term.
Yes.
But, it gives a pretty good snapshot of what an equity market looks like.
Yeah, as long as you don't get carried away with leverage.
No.
Then, but if you're getting carried away and you want to really ramp things up, then you've got to be very, very careful.
You betcha. So leverage is probably one of the most dangerous things out there. So.
Yep.
All right, we'll keep an eye on things. Plenty of data coming out later this week in the UK, ECB.
BOJ, Bank of Canada, Fed, Aussie. I mean, they're all, we've got 3 central bank meetings, and then you've got a whole host of other info washing into the markets. Yeah. So, and Australia Day on Friday.
That's
Short
right.
week for us.
Yeah, it is, and we'll keep an eye on those earnings over the next couple of weeks as well.
Look forward to it.
Excellent. Great. Thanks, Pete.
Cheers, Andrew. Thank you.
And that's the xm.com weekly market update.